All right, stocks by the numbers. Welcome back. Let's do one more. I was looking at CoreCivic, CXW, which was one that I was talking about for quite some time, listed here on the New York. Stock sitting here at about $21 a share, pretty much flat today. The earnings have been pretty stellar going back the last couple of quarters. You can see they're beating by tens of millions. They recently acquired another piece for ICE detainees. We originally looked at the stock. Yeah, now people want to talk to me. We originally looked at the stock back here. You can see it was early December back in 2022. Stock was like 11 and change. And of course, I was saying I like it for the long term. And you can see we had a dip and then kaboom, all the way up to about 16, back down to basically where we were. Tightening, look at that beautiful tightening, and then kaboom, we jumped up. This was elections going into the first week of November. Kaboom, stock shoots straight up to 25 and has been tightening since. I was looking at this triangle here that it looked like, and you can see we broke down below it, and now we climbed right back to the moving average and are going to potentially now get back inside this apex. The stock really should, in my opinion, break to the upside, not the downside, even though technically symmetrical triangle isn't really bullish or bearish. We could also draw out maybe another trend line here. What is this low? 1650. We cut up, right? We could cut up like that, and we're in this big sideways range here, so could remain to be seen. I say, in my opinion, again, tremendously undervalued. Earnings on the up and up, and again, we're talking about a prison stock. And that's why you saw such a big jump after elections, because Trump was the president of what do you call it, law and order, and deportations, and we're going to get rid of the criminals and all that stuff. So that's why everybody immediately jumped into CXW, even Geo. But in my opinion, Geo actually performed pretty well also since we first looked at it at around the same time. But in my opinion, I think I like CXW better. I just think the fundamentals are stronger. Market cap 2.3 billion, and we're bringing in almost $500,000 a quarter, so we're bringing in roughly 2 billion a year. Market cap 2.3 billion. PE 27.5. Again, people look at PE sometimes and sometimes they don't, so I guess take that however you take it. Beta 1.4, a little more volatile than the market. Float 100 million shares, which really isn't too insane. EPS has been very solid. Look at that, beating by almost a dime consistently. Well, here's like a nickel, but you get my point. Just look at that stability. 2024, we jumped up. We almost hit 2 billion, 1.96 billion. And again, even as we're just kind of holding, revenue technically down slightly year over year, 500 million down to 488 million. Look at the margin, though, growing nicely over the last couple of quarters throughout 24 into 25, up to about 5% as of the last quarter. So, in my opinion, we could kind of hang out here and tighten up. And then you can see the first week of August, we have earnings due out. And then kaboom. So that might pop it back up towards like the 23s, the 24s. And we might kind of try to retest those highs. Of course, we could break to the downside as well. So we have to wait and see what they say. But pretty good price target upgrade recently. You can see this was a couple of weeks back. This is why I wanted to jump on and make the video. I just mentioned it in the Discord. You can see CoreCivic price maintained, not initiated, right? Which means they just pulled it up. They think it's undervalued at first glance. 38. No. They had 38. They're maintaining 38. Wedbush. Shout out to Wedbush. So that obviously is a very good little nugget of positivity for CXW. I mean, again, 38, you could almost say it could get to the psychological level of 40 if it runs up to the high 30s, right? Especially in this kind of market, the way people jump in, right? They want to ride the train. So you could potentially be looking at 90, 100% return here, even from this level, even after you not getting in here in the low teens. But if we do see a pullback, though, let's say hypothetically, if it does stay up, right, because it's still like a hot sector stock, but let's say, margins drop or something this quarter, then you can see bottom range, if it stays here and then drops on these earnings, bottom range might be around 18 bucks. So also, if you can handle that exposure, and potentially have some liquidity at this time to add to the position, average down, right, for the next 1 or 2 quarters. So again, your money, whatever you do with this information is entirely your own prerogative. Play it however you see fit. Yeah, so 67 million you can see here to buy an ICE detention center. So they also say, they speak about, here we go, to result in total annual incremental revenue of approximately 40 million. Approximately 40 million, right? So what's that, like another 8% of this revenue right now, right? 10% is like 48. So 40 million, right? So even from this point, that'll bump them up to 528 million, 530 million, right? So something like this, right? If we were to add on, let's just say this time next year, right? You're looking at, instead of 498 million, you're looking at 538 million now. Now you're doing a little over 2 billion a year in annual revenue. Market cap 2.3 billion. So in my opinion, I do still like it. I do still think it's undervalued even here in the 20s. And again, analysts like White Bush, they come out, they're looking at a lot of the stuff that we're looking at together, and they're saying, yeah, 38, undervalued. Acquisition expected to close effective July 1st. Oh no, my apologies. Annual revenue, right? So that would be, yeah, I'm sorry. My brain just recapped that. Annual revenue of 40, so that means it would work out to about an extra 10 million a quarter. But still, more is more, right? I mean, you're going to spend 67 million and you're looking at bringing 40 million now off of it annually. I think that's a pretty good deal in my opinion, right? You make your cost back in what, year and a half? It's not bad. Expected to be funded with cash on hand, borrowing capacity. Membership interest. What is it exactly? It's a 736 bed facility constructed in 2010. All right, fairly new, 15 years old, located in Virginia. Consummated through the acquisition 100% of the membership interest in entities that own the facility. Yeah, okay, buying them out. Provides transportation, care, civil detention services. Male non-citizens, which expires in March 2029. Cross that bridge when you get to it, I guess. 67 million, funded with cash on hand. Expected to close July 1st. Total annual incremental revenue of approximately 40 million. Quote, we are pleased to expand our immigration solutions with this critical location, which ICE has used for many years, a need we expect to continue for the foreseeable future. Quote, we look forward to assuming the operation at this location and welcoming more than 200 new employees to the CoreCivic team. Expanding, new facility, more revenue, more employees. Right? So this is basically, I guess, a policy play, if you will. But however, in my defense as well, even when we first spoke about it, right before 2023, right? So we spoke about it a couple of years ago before we knew that Trump was, looking like the winner and he might get in there and we might see these types of policy changes, right? I was talking about it back here. So, just undervalued, in my opinion. Undervalued. That's what I'm seeing. Director sells 4,000 shares. CoreCivic, this is May 19th. CoreCivic adds 150 million to share buyback. CoreCivic has added up to 150 million to its existing share buyback program. The Private Prison Operators Board approved the expanded repurchase plan last week. According to a filing with the SEC on Monday, there is now approximately $277.9 million remaining under the company's repurchase plan. As of May 14th, the company had bought approximately $222.1 million in shares since May 2022, according to the filing. Stability, right? Healthy balance sheet, slow and steady expansions. That's actually a good sign as well, in my opinion, right? Because sometimes you see some of these companies, they'll be worth like 2-3 billion and change, and you'll see them, just go out on a limb or like take on debt for like 400 million, $700 million projects, or you know what I mean, something really substantial like that. But you can see here, CoreCivic, again, roughly we're approaching 2 billion a year in revenue. The stock, supposedly the company's worth 2 billion. They're slowly increasing their buybacks. They're accumulating more shares, and they're slowly expanding, again, spending whatever 65 million, whatever it was, for a new facility that's looking to bring in 40 million a year, right? Slow and steady wins the race. So in my opinion, I think they're actually playing it the right way. Of course, shareholders would like to see even faster and faster expansion, but also at the same time, you don't want to accumulate and open up all these facilities and hire all these employees and then not actually have the inmates, right? So you have to scale with kind of what the landscape is showing you. But if you recall, again, I think we spoke in an update. I think, weren't they on a call, right? We spoke about Trump, I think, on a call with the CEOs of Geo Group and CoreCivic and the prisons, and they were saying, I think this was right as the whole ICE deportations really started to ramp up. I think they were saying, like, yeah, like we have the capacity and we can expand, and we can fill the need and the requirement that you might have. So it sounds like bigger and better things on the horizon, in my opinion. I just want to double check, make sure I didn't miss any other news. Buyback. Wedbush adjust price target 238 from 42. But then we just read that they maintained at 38. Oh yeah, right. From 42, right. 238 from 42, and then we just got updated that they maintained 38. Okay. So originally they were at 42, which is 100% higher from here, but they're saying 38 again. In my opinion, split the difference. So, I feel there's a $40 stock. I think that's I think that's conservative as well. Check the 10Q real quick. Decrease in federal revenue, lease revenue, increase in efficiency and cost management despite a decrease in total revenue. 32.1 million operating income. Net income up big, primarily due to the absence of expenses associated with debt repayments and refinancing transactions. Beautiful. Okay, safety segment accounts for 91.7. Okay, company has seen increased occupancy of facilities where ICE is a federal partner. In response to legislative and executive actions, this has led to increased utilization of bed capacity in facilities with existing contracts and discussions to activate idle facilities. Which, of course, again, we got the update afterwards about the new upcoming facility coming online. Okay, very good. Yeah, I just want to double check the fundamentals real quick. But yeah, you can see the debt, I mean, was kind of hovering around a billion, slightly above a billion this time last year. Now we're down sub-billion, 982 million debt as of last quarter. Free cash flow down, cash on hand down. But again, we have pretty much a cash deal with this buyout here, this interest in this new ICE facility, which they said was mostly going to be cash on hand, but the margins seem to be growing. Again, we were just looking at the operating income, the net income increasing, they were saying, despite revenue dipping. So it's something like the free cash flow, in my opinion, probably something like that down year over year, excuse me, wouldn't be a big red flag for me personally. Assets outweighing liabilities, both in the short and the long term. You can see, look, yeah, costs basically flat, about 400 million. Gross profit was above 90, dipped to low 80s, 78, back up to 83. Not too volatile, right? Not too volatile. This is the stability we were talking about. Operating expenses, again, basically, again, low 30s, got up to 41, 40 and a half, now 36. That's basically the mean average, right? 36 and change, 35 million. Operating income again recently dipped down to 38 million from the 40s, now back up to 47.3 million. So that's why something like this, if over time it's slowly going to climb up and take those next legs higher, right, to 27, to 32, to 38, then really you just kind of wait maybe for a potential lull, right? And like we were saying, if the margins come in light, or if revenue misses by 1 million or something small like that, and they chunk the stock down from 22 back down to 18 and a half, right? Then on the little dip, that's when you step in, maybe add a couple of more shares, and then boom, now all of a sudden, hopefully you ride the leg up, and then all of a sudden it's back at 24. Oh, you made the right call. Blah, blah, blah. Shares decreasing. Shares decreasing. In my opinion, I like this one. Total equity, look at that. Again, stability 144 billion, 46, 48, 45, 48, 49, 48. You know exactly what you're getting, in my opinion. Book value per share, danced around high 12s up into the 13s. 2 quarters ago, 13.59. Now last quarter, 13.49. So we're trading about 1.5 times book, which isn't extreme. And again, checking all these other numbers, in my opinion, price to sales a little over 1. Price to cash flow, not even 10 times cash flow. But again, we're spending some cash to make more cash. So I don't know if I'd really use that metric. 1.5 times book. Enterprise value, again, what another business would be willing to supposedly pay for this business, almost $1 billion higher than the current value of this stock right now, of this company. Again, market cap 2.3 billion. Supposedly they're saying the enterprise value is above 3 billion, which would put the stock at roughly $30 a share, we'll call it, right? Roughly 50% higher than where we are right now. Our return percentages are holding steady. Look at the gross margin, was up to 18 from 15, slight pullback, still sitting at 17, right? Pretty stable. Operating margin, again, didn't quite get back to the 10 plus where it was, but it's up here in the high 9s, 969. EBITDA holding mid-teens, right? Sitting at about 16%, got up to 17.5, was down to sub 15. Now it's sitting at 16. That's what I mean. It's everything's like middle of the road here with this stock. And the more you look at the numbers and the more you see what is potentially coming on the horizon, in my opinion, I do think there's more value here. And I do think 30 is conservative. And in my opinion, I'll go on record, I'll say, I really do believe there's a $40 stock. And if we begin to rapidly approach that point, I will come back and reevaluate, because it might be worth 60 at that point. But we'll take it from there. But that's pretty much all I have to say about CoreCivic. So definitely one to keep an eye on, in my opinion. And, let me know your thoughts and how you guys feel about it down below. But that's pretty much it. I'll end it there. So stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, right? All that stuff. Share the video. That stuff really helps out. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, volatile, and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.